Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. Just want to thank all of you that have subscribed already and just encourage you, if you're watching, please take a minute and subscribe if you haven't. And if there's anything that we're covering that you think would help somebody, please feel free to share the video or let your friends know about our content. And we're putting out, I think, over 3 episodes every week.
Three
right?
or more?
Yeah.
Absolutely.
Yeah, so you want to make sure that you get all of that. But today, what are we talking about, Patrick?
You know, I read Rich Dad, Poor Dad, I don't know if it's 20 years ago, but it was a long time ago.
Yeah.
But we're going to be talking about Robert Kiyosaki's strategies for real estate investing.
Okay.
So
that's, the interesting thing is, for me, the two financial books, and I would say I probably read them about 20 to 25 years ago, that really grabbed me immediately. One was The Wealthy Barber, and the other was Rich Dad.
We should cover that. I read that as well.
Yeah.
Long time ago.
Yeah, we'll talk about those someday. I actually have the game Cashflow at home.
Oh, yeah. Do you really?
Yeah, I do.
Awesome. I've never played it.
It's really just about getting out of the rat race. And the whole concept in learning these things by playing games. And I've played, I'm sure my daughter doesn't remember now, but we're probably due to play again now that she's about to turn 14. So
And there's actually like little rat pieces or something?
Something like that. Yeah.
I've seen it.
But it's because it's a lot easier to learn when you're playing something like that, right? So
now it's been a long time. I have it all written out as a reminder here, but it's been a long time since I read Rich Dad Poor Dad.
Yeah.
And there's just concepts I never heard about before. And I know there's a difference between like how American taxes and Canadian taxes work. So, maybe not all of the concepts are transfer over perfectly. But it was really interesting.
Yeah, I think it just expands your thinking. There may be some things that I don't agree with now in hindsight.
Sure.
100%. But that's okay too, right?
Right.
So, example, he's big on your home is not an asset. And maybe that's a shift in the way that you think of it. But I do think there's still value in owning a home, and there's value in it in that context. But maybe the way that he talks about owning a home is a different way of thinking.
I think it's different levels of thinking.
Yeah.
So when you're like at the beginning investment level, it's like, well, you still need a place to live.
Right.
Before you start, like, I know what you're talking about, where it's like you start putting your house into a corporation and then you rent back, and, go talk to an accountant how to figure all of that
And
stuff
a lawyer,
out, right?
yeah.
And a lawyer, right?
Yeah.
But that's where the shift in thinking happens. But
Yeah.
But today we're going to just talk about the strategies that he's offering. But not without this first important note to start off with. So, investment rule number 1. I guess you can look at this real estate, stocks, anything, right?
Okay, yeah.
Is always know what kind of income you are working for.
Okay.
Now, in his book, Cashflow Quadrant, he goes over this extensively to like what kind of income are you earning?
Yeah.
So are you trading time for money?
Yeah.
Right?
Yeah, I explain.
So if that's a job.
It's interesting. I'm explaining that to my daughter now. Is that the exchange of time for money is just understand what it is. You're going to work an hour because she's her first job is going to be probably a minimum wage job.
Sure. So
I'm explaining to her time for money means you're going to work an hour and get paid $15 an hour. And out of that $15 an hour, you're going to pay CPP, you're going to pay EI, and you're going to pay some taxes. In her case, probably nothing when the dust settles.
Nothing or minimal, absolutely, yeah.
But so she's becoming aware of this. Oh, so I don't just get what I get.
$15 or whatever an hour, yeah.
And I only get paid if I show up to work. Yep, that's correct.
Obviously.
Right?
I know, but like...
But it's just understanding how the exchange of time for money works. And my mom tried to teach me some of these things when I was a teenager getting my first job, but I knew everything already then. So
Because you were a teenager.
That's right. So I didn't. I didn't listen to her. But it's hilarious now that in hindsight, how many years later, if I would have just listened to her thing was take some money every month and put it into some kind of investment, RRSP, whatever it is, put it away every month and just do that period off the top of all of your checks, whether it's part-time, full-time, whatever you're doing. And if I'd have done that, starting when I was 15, it'd be like over $1 million today.
I think your mom read The Wealthy Barber.
Right? And, it was hilarious. I've said this to people that it seems to me that once I got my first full-time job, and that was as a computer programmer, it was amazing to me that my parents got smarter by the day and I got dumber by the day.
Was that like GW Basic or DOS or something back then?
Back then it was Basic, and then there was a proprietary version of Pascal that we had.
Oh, Pascal,
and we,
yes. Okay.
we wrote, so we were back then it was on a mainframe that we were writing programs for.
Sorry, I'm distracting you.
We were one of the first companies to go on the internet. And so we wrote, and I was part of writing all of this code for our mainframe to communicate with the end user on the internet and get them back live information from the mainframe.
Was that like a dial-up with an AOL account or something?
Well,
we had direct
Yeah,
BBS system or something?
it was a direct line in. And back then, when we went to do get our first presentation about what is this internet and what does it look like, it was then, at that point, the internet was still basically a product of the Cold War. So then the way it was wired together was so that if you blew a city off, it could route around a city and it still communicate. And so it was universities, military, and hospitals that had that. So we had to go to U of A, and they made this presentation about what was the internet and what's it going to do and all these things.
We're getting the whole history lesson here.
Right. So, yeah.
Okay. Trading time for money.
Okay.
Then
So I did that for many years, trading time for money.
Portfolio income.
Okay. Yeah.
I think this is sort of a description of two types of income in one.
Yeah. You want to get, obviously portfolio income is something with dividends.
Yes.
Or rent. I think you can put your real estate into the portfolio.
Right. We'll probably squeeze that in under passive income.
Sure.
But portfolio, exactly, it could be like something like return from like some kind of investment that you made, right? And then it gets the passive income where we talk about real estate. If you're bringing in a tenant's revenue, rental income, or another residual income if it's like royalties, let's say, on work that you've done once and you're getting paid for it. It could be a product, could be intellectual, those kind of ideas.
Sure. Yeah.
So strategy number one.
Okay. So we preface all of this with start by knowing
what kind of income you're earning.
Yeah. You want, where you want to go number wise, and what you want it to look like.
And because we're talking about real estate investment, when it comes to it doesn't have to be tenanted property, but that's one of them.
Yeah.
So we'll probably talk about that quite a bit as we go along.
Okay.
So the strategy number one is don't try to do it all yourself.
Well, that's really smart. I got to say, because there's a couple of reasons. Number one, in that context, you can become the bottleneck, right? If everything has to go through you, and you have to solve every problem, find every answer, we become the bottleneck, right?
I know where my skills are, and I can do some simple construction work.
Yeah.
But you know what? I'm never going to do it as good as someone else.
Sure.
Right. And it's going to take me way more than twice as long to do certain things to figure it out.
Yeah.
Right? It's just not the thing I do.
Absolutely. And an example from another book, 10 Business Secrets from the Bible, by Daniel Lapin. He's a rabbi, and he makes a point in there that he says, my time is better spent giving somebody $20 to mow my lawn, and better spent to do what is my highest producing activity. So in that context, my highest producing activity is not for me to go try and learn a new skill so that I can do renovations. If I enjoy it and want to do it, that's a different thing entirely.
That's a different story, yeah.
Right? But one of the things that I'm a big believer in, and I think we learn a lot in real estate, is that we engage professionals and then we let professionals who are experts at what they do what they do.
You know, a lot of times, like, we have the analogy that a realtor is kind of like the quarterback for the real estate team.
Yeah.
You know, we pass the ball to the next expert.
Yeah.
Sometimes we have to remember that ourselves,
Yeah.
and not do all of the tasks ourselves,
Yeah,
right?
for sure.
If we need to refer to an accountant, lawyer, different inspectors, contractors,
Yep.
then don't hesitate to do it.
Yeah, 100%.
Or know your weaknesses, know your
Yeah.
strengths, where you can make that call.
Yeah.
Throw the ball.
For sure.
Right?
Yep.
Okay. Number 2, plan your tax strategy.
Yeah. I think that's important also, because if you're suddenly going to be adding income, how does that get handled? Do you, if you're talking about you're just getting rent from a suite, are you okay just taking it in yourself, or do you need to start a numbered company? If you're going to start adding multiple properties, do you want to use a numbered company so that, what do the tax repercussions look like for a company versus you personally, or however you decide to do that? But you have to look at what is, I was about to say Big Brother. What are we calling our government? What is the government going to take for taxes?
Yeah.
And how are you working that into the equation? Because if you get X number of dollars and you spend all of it, at the end of the year, you're still going to get a tax bill for X number of dollars.
When you do your taxes, absolutely, right? So what if you're looking at you acquired a property, if it was yesterday or 10 years ago, what's the exit strategy on that? So of course, like, this is where we pass the ball over. I would say always go talk to your accountant.
Yep.
But you have to think about, like, what are the capital gains cost there, whatever, all of your costs for exiting out of that property, if that's your desire, right?
And so there's two parts to that. There's the taxation while you're in it, and then the taxation in the exit strategy.
Perfect. This is just as important as accounting. Number 3, plan your legal strategy.
Yeah, that one's huge, right?
Tenants, contractors,
Sure.
whoever's on whatever the purpose of the property is. If you're flipping the property, or you're going to have it as a long-term holding property.
Yeah.
Yeah.
So in that context also, who owns the property? Do you own the property? Do you have a company that owns the property? Are there partners that own the property? Whatever that looks like, that all needs to go through a lawyer for sure.
Yeah, if there's partnership agreements or anything like that. So
those are not things to DIY.
Those are get your tax strategy and your legal plan all figured out.
Right.
They're kind of together, right? They're very important before you even get started to know what is your exit, is how I like to look at it.
Yeah.
If your exit is with tenants and you're holding onto a long-term holding property and you want to sell it as, like, out here, the governments are asking for densification and you have the property is occupied by tenants, know the tenant rules and what are the penalties in evicting a tenant for what reason.
Yep.
So there could be huge costs there.
Yeah.
So, but that could be different in different
For sure.
provinces, municipalities.
I know a friend of mine. He bought a property, and basically the upstairs was vacant, so he tenanted it, and the downstairs he had given a notice for eviction to the downstairs tenant because his father was going to move into the suite.
Okay.
And so what ends up happening is something happens after, so the person that was there is gone. Okay. And something ends up happening. So the dad doesn't move in.
Okay. And
So now he's like, what do I do? I rent it out because what else is he going to do? And somehow the original tenant finds out about this.
Oh, yeah.
And ends up going to court, and it cost him a year's worth of rent.
Yep. So definitely, I don't pretend to be like a property management, know all the tenancy laws. I just call the tenancy branch. Every time I have a question, I just go refer to them.
Yeah.
Right. I just want to make sure I don't go through any landmines as I go along that process. Right. Okay. Strategy number 4, know your market.
Yeah. And this is where I think you want to engage. We talked about the professionals already, but this is where you engage the professionals who know what's going on in the market, can tell you what the market looks like, and both from a rental point of view and also from the market value point of view in terms of purchase and so forth. You want to know what you're dealing with.
I think I find depending on the level of the real estate investor, they could be many times more sophisticated in knowledge than I do. I'm not going to deny that at all, right?
Yeah.
I think for the average investor, getting to know your market and talking to this professionals, realtors, that kind of thing. But I would encourage you to study the market yourself, to look at all aspects and the nuances, especially because, what if you're looking at the market a certain way and you're not hearing what maybe you want to hear, or you're getting indications that like, maybe that's not a good idea or that's a good idea, but what if you see something different?
Yeah.
I don't know. I don't pretend to I give developers, investors information.
Yeah.
And they decide what they want to do with that information.
100%.
I don't interpret it. I might say it's positive, look at this is better than last year, that kind of thing.
Yeah, I'm a big believer in, and I tell my clients right up front, I'm going to give you all of the information, all of the relevant information, and I'm going to give you my opinion where it's warranted and my expertise, but ultimately you are the one making the decision here. So you need to be informed and make sure you understand what we're talking about.
Yeah, there's an element of risk. We don't have a crystal ball, or any realtor doesn't have a crystal ball. They don't know exactly what's going to happen in 6 months or 12 months, whatever the case may be.
Right.
But I just want to put it out there. But getting as much information as you can that's relevant to, let's say you're going to flip a condo. Well, what's my cost to doing that, and what's my exit going to be?
Yeah.
And how confident is that real estate investor in making a profit, right?
Sure. Yeah.
So and having a backup plan.
And here's the other part of it. You as the investor know what your risk tolerance is.
Very good point. All right, strategy number 5, projecting your cash flow honestly.
Yeah.
Yeah,
that's a really good one, because it's easy to, I'm going to get this much for rent and this is what the mortgage is, so this is what I'm bringing home.
This much profit,
Right.
I would be as conservative as possible, right?
Yeah.
What's my minimum tolerance?
Yeah.
And anything above that is gravy.
And the other part of that is, okay, so this is my cash flow. I need to have a target to put 3 months in the bank before we think of anything with this money, right?
Okay.
So 3 months of expenses for this property.
That's a pretty, if that's a personal rule, that's probably a really good way to move forward on something like that.
That would just be,
you don't know what your
right?
unexpected
I think you could
costs
even,
are.
I would even say you could shoot, if it was me, I might even look at shooting for 6 months versus spending that money right away.
Yeah.
And then also, like you said, take a conservative approach to what these numbers look like.
That's a good way. So that's, make sure you keep that in mind. Number 6, I'm going to add to what Kiyosaki says here. Be good to your tenants. And if it's a project, be good to your contractors.
Yeah, very good. And that's the thing. You're in a partnership with these tenants. They're not working for you. They're not doing you a favor. This is a partnership. And if you're good to your tenants and you're a good landlord, your tenants will reciprocate and you'll get good tenants.
There's a shortage of skilled workers. If you want them to be working on your project, make it enjoyable for them, right?
Right.
I know what contractors have done for tradespeople. And, when they call on them, this is a long-term relationship. This isn't a one-off or something like that, right? Trying to get painters, trying to get supplies. Everybody's sort of not begging, but there's demand for skilled trades. So I just thought I'd add that into the mix, right?
Yeah.
And all right, we're going to wrap this up with strategy number 7.
Number 7, okay.
And this is kind of I'll just say it, trading up.
Okay.
So once you've got yourself into, let's say, a rental property, or it's your first flip, what happens after that? So this is where the concept of trading up is.
I just spend it all.
And I spend everybody else's money too.
Right? You know what I do? No. And I say that because we did that once. where we bought a house. We lived in it, but we renovated, did a whole bunch of updates to it. And,
Okay.
and this was in Edmonton. So I think we made like 100,000 on it,
Okay.
or maybe more. And of course, we bought something else from that. But a big chunk of that money just got spent.
Fair.
Right. Some
Yeah.
of it got used for the down payment and the new home and so forth. But looking back,
Yeah.
I should have probably had a better strategy for how are we doing this?
And I think it's a learning process at the same time. And the more financial education somebody has, like maybe I read these books, but I didn't know I didn't know or see it in practice until
Yeah.
years later.
Right.
Where, I did that myself, or I see clients of mine doing that. I bought my condo. It was at a low price, relatively speaking. And then we were ready to buy a house. And our mortgage broker is like, wait a minute, why don't you just keep the condo? We can pull out the money out of there. We leave 20% in there. We can put a 20% down payment on a house.
Yeah.
It's like, oh, wow. And it was actually easier than what I thought it was. I thought, like your client Devin, as a first-time home buyer, never thought like I'd be in a position to do that.
Right.
And it was actually easier than what I thought it was.
Right. Like I wish looking
I didn't
back,
like being a landlord, but it was fine.
But I mean, I wish looking back that somebody would have said that to me. Wait a minute, you put all this equity into this home, it had a 2-bedroom suite. We expanded the suite to 2 bedrooms. You have all this equity in the home. You've got a 2-bedroom suite. Why don't you take out the equity and go buy your new home and then finance or pay off this mortgage from here with the renter and take the excess and put it over here? But I didn't understand those things then. Nobody explained those things then. I hadn't read Rich Dad. Maybe I'd just been reading Rich Dad at that point and didn't understand the concepts yet.
I was happy to have a condo.
Yeah.
I was happy like, oh, look at all my savings. I could go buy a house, right?
Yeah. Same. Yeah.
So that was a great first experience in leveraging our equity in the property to buy another property while keeping that condo.
Yeah.
So it was kind of strange that, and I think at the age we did it at, no one else seemed to be doing that yet.
Right.
So, it's kind of a surprise, and we were kind of venturing off trusting like, oh, this is how it's done.
Right.
So trading up.
Sure.
And that's just a sample of like going from one property to a second property and owning both of them at the same time, right?
So
and you can continue to do that.
Yeah, and I think that goes back to starting with number one. What's your plan? Right. What's your number you're after? Where are you going, and how are you going to get there? Mm-hmm. Right. So this is the trading up. Is obviously you're continuing to move on, or you're continuing to grow, increase assets, increase what you're doing.
So we wanted to share those 7 strategies from Robert Kiyosaki. Am I saying it right?
Kiyosaki, yeah.
Yeah, and we've read those books in the past, and hopefully this is encouraging to anybody that's out there. If they already have a property, you might look at using your equity to expand and get into more real estate and build up your portfolio, where you can start taking advantage of like some of these accounting principles or some of these legal strategies to limit liability to yourself against, let's say, tenants, right?
Yeah. So, well, thank you for joining us today. I know that was a little bit different than what we normally do, but it's a lot of fun regardless for us, I think. And it's interesting. You always learn more when you look at these things again. So if you have something that you say, hey, I'd like to hear this or hear you guys talk about this, or maybe you have some thoughts about what we've talked about, please put it in the comments. We love to read the comments and respond to the comments and respond to any questions that you have. And we're growing and growing as our subscribers are growing. So please take a minute and subscribe to the channel. You don't want to miss any of the content that we're putting out. We're over 3 episodes a week right now. So subscribing just makes sure that you're notified. And if you know anybody that you think would appreciate what we're talking about or get some value out of it, please send them a link to the videos or, bring them here and let them have a look.
Awesome. Thank you so much for watching, and we'll catch you in the next video.
See ya.